Right. So this, let me share my screen.
Right.
Let me share my screen. Oh no, not that. It's on camera. Present now. Okay, entire screen. So you should be seeing a circle and you should be seeing my chart now.
Yes, I can say.
All right, this is what my chart looks like with all my indicators on it. It's not a lot. I only have 1, 2, 3, 4, 5 indicators,
Wow.
but I use them for different purposes. I don't usually use everything at once. But if I want to start looking at uh, an asset and trading, I start with this view and then I turn them off one after the other.
Okay.
Right. This is S&P. You'll notice. I have removed all those lines I drew last week. But if I go to the weekly chart and turn all of this off, turn this off, turn this off, turn this one off. Right. This was the resistance line I drew somewhere around here.
Yeah.
So what I was saying last week is if price closes above this line, I was going to buy. But I'm still having doubts. I'm still having doubts because we have broken above, we have closed above that line, but sometimes it's the way price closes above the line that matters. And the way price closed this week was not very convincing. Yeah, I'm serious. Not very convincing at all. It looks like it's struggling badly. Let me start with this indicator. Right. Turn this off. Yeah. So with this, we're above the 50, 61% Fibonacci line.
Yeah.
So with this, right now, all I'm using is this indicator. With this indicator, price or the asset is bullish when price is above this green zone. So this candle, this week's candle has closed above that zone. So this looks bullish. But there are other things that need to align for this to be bullish. So I have this yellow line here as the conversion line, and
Okay.
I have this purple one. This is just my personal style. Okay, so I am trying to use different indicators to tell me if I should go long or I should wait or I should short it.
Okay.
So with this one, this yellow line needs to be above the purple line. Right now, the purple line is above it.
Are they moving averages?
Yes, they are moving averages, but as you can see, they have some periods where they are flat
Yeah.
and straight. So the reason they're like that is because your moving average is calculated from the close of that candle. With this one, you take the high and the low of price, calculate the average, and then you use that value to plot this line. So it's like a moving average using the average of the candle, not the
Okay.
close of the candle. Yeah.
Okay.
So the yellow one is the fast, the purple one is the slow.
This go.
This yellow one is 9 periods. This purple one is 26 periods.
Okay.
So when the purple one crosses when the yellow crosses below the purple, that is looking bearish. And when it crosses above, that's bullish. So right now on the weekly chart, I will be more comfortable with this yellow was above. So that's one sign that is not yet bullish. The other sign is this white line. That's the lagging span. It needs to be above price, somewhere here. And it's not there yet. So looking at this indicator or looking at this S&P asset with this indicator, I only have one positive sign. So I need to try and use other indicators to check if this bullish sign is good enough. But if I turn this off, go to this indicator. Right, this is the TD sequential.
Okay.
It's called the TD sequential. That's the name there. It has all these numbers there. It's not looking very bullish. I have this arrow pointing downwards. That's sequential 13. That's a sell setup. So this is telling me that this rally from here, from this candle all the way up, is beginning to lose momentum, slowing down. So usually after this number 13 shows up, you get a pullback. But that pullback has not appeared here. So I need to be careful. But I don't trade the weekly chart. I trade the daily chart. I'm just trying to see what the long-term picture looks like.
Okay.
Right. Turn this off. Moving averages. Right. This blue is the 200-week moving average. So we're above it. I have some other moving averages. I use them on the daily chart for something else.
Okay.
It's not much to see here. Let's go to the daily. Now, this is the interesting part. On the daily chart, with this indicator, I'm trying to, this is called T-map. It's basically three moving averages together. All I'm trying to see is if there is a trend and if that trend is sustainable. And I want to know when that trend is turning to the opposite trend. So for a bull trend, you need this orange moving average to be above, this green to be in the center, and the blue to be beneath. And that's what I have here. So there is a trend kind of here. That trend began around here. So this tells me there's a trend. It's not a signal or anything. It's just saying, okay, there's a trend. We could be having a bullish trend here. And these lines need to be equally spaced apart because the yellow, the orange is 20-day moving average. The green is 35. The blue is 50.
Okay.
So that's a positive sign. Take that away. You're going to go to this Ichimoku. This one is also positive. You can see here, price is above this cloud. It's called the cloud.
Okay. And what's the difference between the red and the green cloud?
The red is bearish. It's negative.
Bearish, okay.
The green is bullish.
Okay.
So this cloud is derived from this yellow line. Remember, this yellow line, the conversion line, is the high and the low of the candle 9 periods back divided into 2. So the average.
Average, okay.
The purple line is that's the high and the low of the candle 26 periods back.
Okay.
So
Okay.
this cloud you're looking at is made up of two lines. So in between those lines is shading.
Okay.
The line, let me use the green part. The line above this line here is this conversion line and this baseline, their highs and lows divided into two. That is their average, plotted 26 time periods in the future.
Okay.
And the line below is, what is it again? Okay, yeah, the same, it's the high and the low of the candle 52. Am I getting this right? 52, let me just pull it up instead of making mistakes. Once you know how to use it, knowing how it's calculated is not really important.
Okay.
Pull it up here. So, okay, this is it. So it is 52 period high plus 52 period low divided by 2. Right. Okay.
Okay.
So 52 candles behind. You take the high and the low, add them together, divide by 2,
By
and
2.
you plot it 26 periods in the future.
Okay.
Yeah. So what that does is, where am I? What that does is it will give you a support and resistance zone that is dynamic. You know,
Okay.
usually when we draw support and resistance, this line is resistance. But as price is changing, that line is. What did you say?
Sorry, 1 second.
Okay.
Yeah. Sorry. I'm back. All right, so we're trying to analyze the Ichimoku.
Yeah. Do you want me to go on?
Yeah, continue. Go ahead.
Okay. So this line I've drawn here is the resistance line, but that line is static. It doesn't change. It remains where it is as price changes. So with the Ichimoku cloud, the support and resistance zone is dynamic. So it's changing with price. So it's changing in shape, it's changing in thickness, it's also changing in bias. So this line is the one on top, calculated from these two lines.
Yeah.
For using how many days?
52.
No, the one below is 52.
Okay, yeah, the one below 52.
Oh, this is just the average. Okay, so with this line, it's just the average of these two lines. Plotted 26 days in the future. With the line below, it is the average of the candle 52 periods prior plotted. So when you have this one above and this one beneath, then you have a bullish setup there.
Okay.
When you now have this one that is above here below, and this one below here above, then it's bearish. That's why this is red, and that's why this is green. So that's basically the Ichimoku cloud. So how to use the Ichimoku cloud? You only want to buy when price is above the cloud, and you want to ideally you want to enter that position when this yellow line crosses above the purple line.
The purple line.
That's around here. So if I was trading, if I wanted to take a trade, after that sell-off, I will wait until here,
Yeah.
that day here to enter that trade.
Okay.
It's basic. It's not pinpoint accurate, but it's the safest way. It's trying to keep you safe. So, using this crossover is one way, but if I wanted to be extremely safe, I would wait for price to break above this cloud somewhere here before I go long. And then if I wanted to be really, really, really safe, I will wait until price was above, sorry, until the yellow line crosses above the purple line. And then price was above the cloud. And
sorry.
yeah, don't worry.
Let me take care of this, my girl.
Okay, yeah, go on.
Sorry. Oh, sorry.
Right, no problem at all. No problem. It's
my wife
okay.
is sleeping, so I'm just taking care of her.
Yeah, there's no problem. It's just a phone call. Right. So with the Ichimoku cloud is a very safe way to trade. Or it's it's an indicator that keeps you safe. Because it tries to make sure by the time you enter your position, the coast is clear for you. There is less risk of price going against you. So the first sign is the conversion line, that's the yellow, has crossed above the purple line, which is the baseline. Second thing you watch out for is when the price has closed above the cloud. The third thing you look out for is this lagging span has closed above price and out above the cloud.
Wow.
So if I was, let me just do a quick replay. If I was going to go long here, I would have done that. Let me see. Okay, let me replay from here. Let's see. So we have crossed above the baseline here, but the candle is still beneath the cloud.
Yeah.
And you can see this cloud is still bearish. So what?
Yeah, it's still bearish. Yeah.
So what? This was 14th of April.
Wow.
So watch.
Wow.
So that's a sign. Some aggressive traders can go long here. But look at this. It's still bearish.
It's still bearish.
And look at this line. It's still beneath. Now this is turning green.
Okay.
But I will still wait and wait for the lagging span to break out. And now it has broken out.
Yeah,
And go all the way.
Wow.
You're not trying to catch the bottom. You're just trying to jump onto the trend when it is safe. So you're waiting for let's say hopefully a very long trend like that. So you want to jump on that trend when it is safe. So this is not for aggressive traders that want to catch every up and down.
Yeah, every chart.
Right. So that's that one.
Okay. But how do you? What if you want to exit? Does it give you an indication, or this one is just for entry?
If you want to hold on. If you want to, this I've just shown you how to view entries. If you wanted to exit, let me do another replay. Another replay from here.
Okay.
So if you look at this chart, we've been on a bull run from here. Okay, price is above. So the yellow line crossed above the purple line here. Price was above the cloud. Everything was above the cloud. So let's say you had gone long here, and price was going and going and going and going and going. So we're here today. Everything is above the cloud. So watch this. The cloud is green. This was the period leading to the crash in February.
Yeah, to the crash. Yeah.
So the first indicator you watch is that moving average crossover. You see that? Oh, that happened very fast. Let me go back.
Yeah, that happened really quick.
Really quick, yeah. Let me go back. I'm going to slow it down. So the first sign we're looking for is when this yellow line crosses below
the purple.
So this was February 2020.
February, yeah.
Everything was good. What we know there was the virus was already in China.
Yeah, at that time, yeah.
So just keep watching. You can see price has come down, but it's still in the cloud. Now the yellow line is crossing. Here, price has broken below the cloud. That's the first one. Oh, I even forgot to watch. Look at this one. This lagging span has broken below the cloud. So in this case, the moving average crossover is actually slower. The slower was very slow in telling you that we're selling off. Now the crossover was supposed to be somewhere around there, but both of them were overlapping.
Yeah, at that point, yeah.
So at this point here, the candle has broken down. Whenever your candle crosses into your moving averages, that's the warning sign. But that can happen without a sell-off. For example, here, it crosses into the moving averages, but it goes back up.
Yeah,
So that sign is not reliable. So you want to combine that signal with other signals.
Okay.
So here, let me go back again. So what happens is here we are having that crossover, but the candles have begun to break into the cloud. Remember, this cloud is supposed to be your support. See the candles coming down. We have crossed into the moving averages. Here you should be a bit worried, and here we're broken the cloud. So at this point, that's your warning. We have crossed into the moving averages. The candles have broken into the cloud and out. If you were long, this is where you close your position. The lagging span is still above the cloud, but eventually it will come beneath the cloud. So this is the first sign.
Yeah, okay.
The first reliable signal that you need to close your trade. Take your profit. And then watch. It will continue.
Wow.
So you can see those two lines are still overlapped. So even here, you're not going long because you know it's not safe. We're still beneath the cloud.
Yeah, the cloud.
Still below the cloud. And now the conversion line has diverged completely from the baseline. So we're going to bottom somewhere here, but you don't know that at this point. So you see, the Ichimoku keeps you safe because once we are under the cloud, you don't want to buy. But you can take this as a signal to start selling.
Yeah.
So let's say you started selling here. Let me pause it. Let's say this was our our point of confirmation. Let's assume you started selling at this candle. So you would have sold all the way down here. And even after this bounce, you know we're still under the cloud.
Under the cloud, yeah. So,
And the conversion line is beneath the baseline. So you're still comfortable selling. So you would have sold all the way down here. You would not have started selling here because we were still above. So you would have cut it. So the goal here is it will help you identify the long-term trend, but you won't be able to catch the start and the finish of the trend. You'll just catch
yeah.
the most important body of that trend. So it goes on a bit slow. So 23rd, we have bottomed here, but you don't know that. And the indicator has not told you that. But we have crossed into the moving average. That's a warning.
Yeah.
And so if you're very conservative, you probably take your profits here if you were selling. And here we are consolidating. It looks like we're moving sideways. So if you're happy with whatever you have, your profits here, you can close them. If you wanted to go long, this is, if you're aggressive, you can take this as your signal to go long. Once this yellow line crosses above, you can see it's already getting
Yeah, I get it there.
crossed. Now you start
Yeah.
watching this lagging span and the candles. The candles will close above this, and the lagging span will close outside this. So this is your second signal to watch.
Wow, this is impressive.
It's easier to understand when you watch in replay, but in real time, you have, okay, now we're close above the cloud. So you can also go long here, but
At that point,
it is safest if you wait for this lagging span to close above the cloud. So you're watching three things or four things. You're watching the candles cross into the moving averages. You're watching for the conversion line to close above the baseline. You're watching for the candles to close above the cloud. And lastly, you're waiting for this lagging span to close above. So you will miss out on all of this.
yeah.
But you're hoping it's a long-term trend. Remember, we're recovering from a crash. So
Yeah.
at the end of the day, the recovery should last for maybe years, but we don't know how long it's going to last. So now we're green here, and this is close here. You can comfortably go long. So that's how Ichimoku works. So using
Wow.
using Ichimoku, let's stop this. I'm going to delete this. So using Ichimoku alone, this is bullish, safe to go long. There, everything says go long. On the weekly chart, we're broken above the cloud. On the daily chart, it's a perfect long setup. Perfect. But you cannot use one indicator alone. You have to use
Indicator.
indicators you have to use a combination of indicators too. So you can remove any errors or biases that your indicators might have. So if I close this, I turn on my T-map. Let me show you how that T-map works. When you have
Okay.
when you have a trend, you're going to have these three moving averages in parallel, and the space between them should be even. It's not always going to be equal. It's going to be even. So that's what you're seeing here. When you have, let's say you were buying here. Let's say here. You can see the three of them are parallel. The orange is above, the green is in between, the blue is beneath. So if you're buying here, you should be comfortable to stay in that trade and just keep riding it. So even where was that? Think, yeah, it was here. So even when, yeah, I was here. So even when price begins to pull back, it comes into the moving average, but you can see the orange moving average is still above. So the structure of that those three lines has changed. The purple and the green are touching, but there is no crossover yet. So you stay in that trade. So with this,
Okay.
when you identify the trade with Ichimoku, you want to use this to support what Ichimoku is telling you. So you also,
Okay.
they're basically supporting one another. So with this, you
Mm.
know, right, I'm going to stay in, let's say you bought here, this is where you enter the trade on the phone now. You enter the trade here, you enter the trade here. You want to keep riding that rally, even when it comes down here, your lines do not cross over, you stay in it.
Yes.
It bounces back, it goes above. Here there's a bit of trouble.
Mm.
Okay, you can still stay in the trade here because when your orange moving average is beneath, your green is in the middle, and the blue is above, then it's becoming bearish. Okay,
Okay.
so right now it's not bearish, it's just a consolidation. If I draw a line, you'll see what I mean here. Let me draw a channel here. Look at this. So this is simply a consolidation. It's not like the S&P is going bearish. No. So with this T map, you are comfortable to stay in that trade and you can ride out that consolidation. And then
Mm.
once you get to this date here, the trend continues. So you can see
Yeah.
the orange moving average moves back above and the green moves to the middle, and then the trend continues. And keep riding that trend. So let's say you had bought all the way down there. You know through these indicators that you should stay in the trend. So you keep riding it all the
Wow.
way.
That's a long.
Yeah, keep riding it. Even after this sell-off. So this is not the Ichimoku. So this broke beneath the three of them. It bounces
Mm.
off this blue line is the 200-day moving average. It bounces
Okay.
off the 200-day moving average. So that gives you some sort of confidence that through that sell-off, you're not really worried. So you ride it out,
Okay.
and then you get here, there's another consolidation here, and it looks like there's some trouble here. There's some trouble. And then
Mm.
you have this. Blue line is above, green is in between, the orange is below. So that looks pretty bad.
Yeah.
It's a very rough patch. So most likely you'll be worried you might close the trade here. But if you're not, if your psychology is very, very strong and you're not worried, you can still ride it out.
That's
Okay,
a
because
good idea.
yeah, because even though we had that bearish alignment between the three of them, it it's not very even and it doesn't continue for a long period of time like this. So we have the orange below, the green in between, the blue on the top, but it doesn't last long. The orange crosses back above, and then we resume the trend. See that? So this
Wow.
indicator can help you ride out all these turbulent patches. Helps you ride all of that out. Keeps you in the trade. It gives you peace of mind. So you write all of that out, and then the trend continues. And then we get here. You have that crossover here. The orange is below, the green is between, the blue is on top, and then you see it spacing out and widening out here. Now that's a sign. Yeah. So the moving out, yeah, the moving that is telling you that we have a downward trend. It's not a signal. The moving average is a lagging indicator, so it's not going to tell you at the time when price turns downward. It will not tell you exactly at that time because it's lagging, but it will let you know if that is a trend that is sustainable, and that's what this is saying. Like, these three are well spaced out. This is a trend. So you have a trend. This is a trend here. That's a trend. So use it to identify trends. So we remove that. Remove this. And then when we got to the bottom, this is the bottom. This was 2018. This crosses back above. The green crosses above the blue. And then we have another trend here. You can see this is a sustainable.
At that point, moving average is still up.
What is
the blue? The 200-day moving average is still up.
Oh yeah, we've broken below. We're below. Yeah. Oh yeah. The 200 moves slowly. Okay. It's a very because you're taking the average for the past 200 days. It cannot move as quickly as the 50, 35, and the 20.
Okay.
So it takes longer for it to move. So it is mostly used as a support and resistance. If you were trading this, once this orange crosses above the other two, and the blue crosses above, or the green crosses above the blue, you will use this breakout here as a sign. That what I mean by breakout is once price breaks above the 200-day moving average, it tells you, okay, it looks like we are getting ready to resume the bullish trend. So if you notice, at this point here, zoom in. So when we were trying to break out, we got here, it acted as resistance, rejected price, so we went back down, came back up, it rejected price again, then we broke out. After breaking out, we kept going, and then when price got here, the moving average became support. See, it bounced off the moving average. Yes, so that's the job of the moving average in this indicator. And then you have that trend. Here you have some turbulence, but you don't really have, a bearish trend. You just have some sort of turbulence consolidation. So with this indicator, you know that there's nothing to be worried about here. I'm just going to ride it out. Just maintain your position. And then after that, see, the lines are evenly spaced out and the trend continues. So this is present day 2020. This was February. So in February, all see the lines were parallel, evenly spaced. We kept going after that support, and then on that day they broke below the line. So this is why it's a lagging indicator. We have broken below here, but it was on this. It was several days after that the orange broke below the blue line.
Yeah.
And once it broke below the blue line, immediately it formed that structure telling you that we have a downward trend.
Downward trend, yeah.
And you will notice that we've had some turbulence here. There's no clear trend from here to here. We don't have a clear trend there, but
Yeah.
we are beginning to have a trend here.
Yeah, I think, and also there's a breakout as well.
Yes. So we're having a breakout above 200-day moving average. We're having breakout in Ichimoku. The T map is evenly spaced. The orange is above, the green is in between, the blue is beneath. So it's beginning to look like a trend.
Yeah.
So you're getting all this information, but you have to make a decision. So what this will boil down to is, from your experience trading, which of these indicators do you trust the most, or which combination of these indicators do you trust?
Yeah.
So it's not really a definite signal to go long or go short. No, just going to give you all that information so you have a deeper understanding of what's happening.
Yeah.
So initially, my what I was thinking was, once we break above this white line and we close above, I am confident that I can go long, because if you combine Ichimoku and this T-map indicator, everything looks perfect for a long.
Yeah, everything shows that.
Now, my third indicator is, no, not this, is this TD sequential. So with this one, you can identify if there is a trend, and you can identify when that trend is running out of momentum, and when it reaches exhaustion.
Okay.
So this indicator, unlike the others, is for timing. It's very, very strange how it times the market for you. It will tell you, like, see this aggressive bullish setup here. It timed the market perfectly there. Perfect timing to go long. Look at this 9. So you have a sell setup, 9 candle, and aggressive 13. Perfect timing. So if you had gone short here, you won't miss out on any move up. It goes down not long after. So the thing is, it requires a little bit of experience, because see, it has been warning you from here. You have a sequential 9, you have another combo 13 here, another 9, another 13. So it's telling you that this bull run that we've been having for a long time is running out of momentum. So when you see this, it's telling you that you should expect either a pause in the trend, or the trend will gain more momentum. That's if you see a 9, expect a pause, expect a pullback, or expect more momentum. You never know which one is going to be.
Okay.
But it tells you to be ready. So combining this with other indicators is where it becomes powerful. So with this, we got this aggressive 13 saying, okay, it's time to go long here. And price went higher from there, all the way to here. Then we got this 9. Now remember, that 9 is saying expect a pause, or a pullback, or a continuation of that momentum. That is, so the 9 says there is a trend. After that 9, it will also count down to 13. Now, that countdown from 9 to 13 is telling you, all right, this is not just a trend, but this trend has momentum. So this white line here is, okay, there is a trend. This countdown to 13 is, all right, this trend has momentum. But once you get to 13, it's telling you, all right, that trend is losing momentum and now it's
Momentum.
getting exhausted.
Mhm.
That's what I'm saying. And if you
What is the
notice,
difference between C13 and A13?
so usually you have a countdown from 1 to 9,
Yep.
identifying a trend.
Yep.
After that 9, you can get a pause, a pullback, or
Or
stronger
a
momentum.
momentum.
Now,
Stronger.
from that 9, you start counting, you count down to 13.
Okay.
So this is the countdown. It begins here. You can see it. That 9 is the 1.
Okay.
So this last candle, which is 9, becomes the starting
It's starting.
candle for the countdown if this 9 closes above the high of candle 7 or 6.
Mm.
And we have that close there. So we begin to count down from candle 9. So we have that countdown. There's a mechanism about how this works. Okay, so with the 9, you want the candles to be consecutive. You can see one,
Mm.
2, 3, 4, 5, 6, 7, 8, 9. With the
Mm.
13, the candles do not have to be consecutive. You can see this
Okay.
is 1. The next candle is here, 2.
Mm.
Because
Okay.
it's to close above the it needs to close above the close of the candles 2 days prior.
2 days
So
prior. Okay.
this two needs to close above this.
Yeah. Yeah.
Yeah, that's why with this one we couldn't do that because 2 days prior was higher than that candle.
Mm.
So you said what's the difference between aggressive 13, A13 and C13? After you count down all the way to 13, then you have reached exhaustion, and then you
Mm.
can take a sell position. For some traders might feel comfortable going short before you get to that 13. That's the aggressive 13.
Mm.
That is, you do not wait until the conditions for a sequential 13 are fully met. You're a bit in a hurry. You want to jump into the sell position before the indicator gives you that
Mm.
sequential 13. That's the aggressive. It means you're aggressive. If you wait for this 13, you're conservative. So that's the difference. This is aggressive. This is conservative.
Conservative. Okay.
Yeah.
Okay. Okay.
Now there's another way of counting down to 13. That's the combo 13. So
Mm.
the difference between combo 13 and the sequential 13 is for you to have a sequential 13, you must have a 9 set up. After that 9, you count down to 13. That's how you get
Mm.
this 13. So you need a total of 9 plus 13 candles, at least 22 candles. With the combo 13, it uses a different way of counting. So you don't need the first 9 candles. You start counting all the way from 1 straight to 13. It's a different methodology. Yeah.
Okay.
Combines the setup phase and the trending phase together into one countdown.
Mm.
So that's why it's called combo 13.
Wow.
Now, why I'm a bit hesitant to go long despite the fact that this candle closed above that resistance line is because of this indicator. But this indicator, it told you to go long here, you went
Mm.
long, and then it told you there is a trend. That's the 1, 2, 3 up to 9. It says there is a trend. And then when you got to 9, it says, okay, expect a pause or a pullback or a
Mm.
continuation. So we got that pullback here.
Yeah. Successfully.
Yep. And then the countdown to 13 began. We got here aggressive. Nah, I don't really like this aggressive. But we counted all the way down to 13. What that is now saying is, all right, we've had our trend, had a trending phase with the momentum. Now we are reaching exhaustion. But while that 13 countdown was ongoing, another 9 setup began to count here. And we had 9 consecutive candles. So when you see the 9, expect either a pullback or a pause, that's consolidation, or another countdown to 13. But the next day was a combo 13. Combo 13s are rare. They're not very common. You see lots of 9s, aggressive 13, and sequential 13. Combo 13s are not very common because of the way of counting.
Okay.
So in the last 3 days, Wednesday, Thursday, Friday, we had sequential 13, 9 setup, combo 13, all telling you expect a pullback or this trend has reached exhaustion. That's what all 3 of them are saying. And all 3 of them are appearing just at that point where I identified my resistance line, this white line.
Yeah.
Remember, this white line is just arbitrary. It's just a line drawn by me.
Okay.
It might be right, it might be wrong, but coincidentally,
All
this
of them are
yes, this TD sequential is saying we are also identifying exhaustion at that same point. So that's something for me to think about. And if I am expecting a pullback, if it's not a crash, I don't expect a crash, but if it's a pullback, I'm expecting a pullback down to this level. Why that level? Because you can see this indicator has a way of identifying support and resistance as well. So this green dotted line here that is just forming is the extreme of this move that we've had.
Okay.
So if price pulls back, that indicator is saying expect a pullback down to this level.
To that level, yeah.
Yeah. When we started counting down during the sell-off, when we started counting down from here, this is candle 1. I don't know if you can see those numbers. 1, 2, 3, 4. So when we started counting down from here all the way up this, yeah, when we started counting down from here, this move down, the extreme of that move is this red line. Can you see this red line?
Okay.
That's the extreme of this move down. So that is the resistance level for the recovery of this move.
Yeah.
So that
level.
exactly, this whole trend is the recovery of that move. So we have rallied and we have just reached exhaustion right at that level.
Wow. This is interesting.
Yeah, it's interesting, but it doesn't work all the time. That's why you have to combine several indicators.
Yeah.
So with this indicator, it is contradicting the other 2 indicators. Now, the other 2 indicators are for identifying trends and staying in the trend. This indicator is for timing. If you not always get the timing right, or if you do not get the timing for the big move right, or it will tell you. For example, here it says expect a. What most people don't understand about this indicator, they think it's once you see 9 or 13, it's telling you to sell. No, it's telling you expect a pause or a pullback, but we can also have a countdown to 13. So you see 9 here, nothing happened. See 9 here, 9, 13, small pullback. But eventually, before you got this, you got that 9, and you got that aggressive 13 happening at on the same candle.
Yeah.
The same candle. So with this one, I have sequential 13, 9 setup, combo 13 happening in 3 days. and that's happening at a resistance level, and that's happening at a point where even without indicators, using just price action, the turn goes off, price action alone is telling me that there is a loss of momentum here. So the price action, I will look at the chart without any indicators, just study the candles and the patterns on the chart. If I draw a channel here, see this, we have a strong trend up here, and then from here, it's just consolidation. There's a loss of momentum here. But we're just beginning to break out. We've broken out of this channel, but it's not, sometimes you have a breakout, but it's the way in which you break out that is important.
Okay.
So using price action, we have broken out of that consolidation phase, which is this horizontal channel. So we entered that phase here, we bounced, got rejected again, and then we broke out with these 4 candles. 1, 2, 3, 4. Now look at these 4 candles. This is the breakout. This is confirmation. But look at that candle. It looks like what should I call it? It looks like, it almost looks like a spinning top.
Okay.
But what I'm doing now is candlestick analysis.
Yeah.
So with this rectangle, that's chart pattern analysis. With this channel, that's chart pattern analysis. This is a rectangle. Now I want to use candlestick analysis. This looks like a spinning top. And then the next day, we pulled higher. Okay, that's good. And then on Thursday, we got a dragonfly doji. Now this dragonfly doji signifies something. And then Friday, we got a hanging man.
Yeah.
So this dragonfly doji is signifying indecision in the market. So we have reached this point, but there is indecision in the market. Bulls try to push price up, bears try to push price below. Eventually, the the uh, the amount of momentum between bulls and bears was even.
Yeah, totally. Yeah.
So that is a sign of indecision in the market. We can't decide if we want to go above, that is continue the trend, or we want to go below, that is pull back. And then the next day, we got a hanging man. Bears try to push price down, and they had some level of success. Look at that long wick.
Yeah.
The hanging man has a long wick and a small body. So bears try to pull price down. Bulls pushed it up. Eventually, it ended up bullish. But this candle is a sign of exhaustion. Remember with the previous indicator, those sequential 13, combo 13, and setup 9 were telling you there's exhaustion in the move.
Yeah.
And then looking at the candles, we're seeing equal momentum between bulls and bears. And that struggle is continuing. But this candle is a topping formation. It's trying to indicate that we might have reached the top because the bulls don't have enough momentum to continue with the rally. But this is a topping pattern here. So the question now is, what should one use in making that decision? Do you want to go with Ichimoku and TMAP that are telling you, right? We could be having a trend here. But do you want to go with TD sequential and just price action alone, telling you we could be having a top?
Organization.
It's tough. It's tough.
Yeah.
It's tough. I was planning to go long, but I kind of trust this. I trust this indicator, this one.
The TD.
Yeah, I trust. It's a time. See, the others are not timing indicators. This one is a timing indicator. It helps you time the market, and it's very uncommon for you to have sequential 13, 9 bearish setup, and combo 13 in 3 days. That's a very strong sign of exhaustion. At least I'm expecting pullback down to 28.50. At least. Or at most, let me say it, at most. That is going to be enough. But we might not get it. We might not get it. Then another thing you can also do is you can study the market breadth. That is, without using indicators, you look into the market, see how stocks are doing. So I'm going to pull this up. Another thing to point out, see this gray line here, just that line. That's the RSI. So the RSI is almost overbought. It's not there yet. It's close to overbought territory. So this other indicator here, this green and red, is the McClellan Summation Index. So what it does is it studies all the stocks in the S&P index, and it tries to look at the number of stocks that are advancing, that is increasing.
Yeah.
When a stock closes above the price it closed yesterday, that's an advance. When the stock closes below the price it closed on the previous trading day, that's a decline. So advanced decline, advanced decline.
Okay.
And you'll notice during this bull run here, let me take this bull run shake away. So during this bull run here, we had lots of stocks advancing. That's why we have this green. You had more stocks advancing than declining. So when you have more stocks advancing than declining, you have a bullish trend that will result in all these lines being above the zero line. So this line in between is the zero line. So when you have green, it means we're bullish. And then in February, when we began to have that sell-off, we started having more stocks declining than advancing.
Yeah.
But we already had more stocks declining than advancing before February 20th. You can see that here. You see this?
Yeah.
Yes. So this indicator had switched from bullish to bearish on the 3rd of February. So this is giving you an indication, even before the sell-off, that something is going on. Forget about the news. Look at the stocks in the S&P index. We're having more stocks declining than advancing, and we have so many stocks declining that the indicator has moved into bearish territory.
Yeah.
That is what happened here. So let's say you were trying to trade on this day here. You were trying to trade during this period, and you had this TD sequential giving you 9 sell setup, aggressive 13, and then you look at this indicator, it tells you we're now in bearish territory. and you're hearing news of the coronavirus,
Yeah.
and you look at Ichimoku, they're still above the cloud.
Mm.
It puts you in a very heightened state where you are
Yeah.
very you, you're not at peace anymore.
Yeah.
You are
On that point.
you are at a loss to close all your trades and take your profit or start selling.
Mm.
So that's another useful indicator. And then as we got to 20th of February, the amount of declining stocks began to increase.
Increase. Yeah.
And as we proceeded into the sell-off, you can see the number just increase. And it got to a maximum on the day we bottomed. You can see that there. That's March 23rd. That was the maximum. And since that day, we got the aggressive 13 candle for TD sequential. And the Ichimoku base conversion line began to go upwards. If you now combine all that information with this summation index, you see that the number of, although we're in bearish territory, but the number of declining stocks is reducing. That's what this is. If you look here,
Mm.
you
Yeah.
see a reduction.
Mm.
So that gives you some sort of confidence that it looks like what Ichimoku is telling me and what TD sequential is telling me is correct. It gives you some confidence to maybe start buying. So we have that decline, it's going, it's going, it's going. But we have not fully crossed into bullish territory because this is Friday. As of Friday,
Yeah.
we crossed. So we still have more declining stocks than advancing. Another very useful indicator.
Wow.
So this helps you view how this is not about price now. This is not about calculations. This is about the performance of the stocks in the S&P index. Another one you can look at is this. Now, this chart is telling you how many stocks in the S&P index are above their 200-day moving average. Remember, the 200-day moving average is this line, this blue line. If you look at the S&P, we have just crossed above it.
Yeah.
But with this indicator, well, it's not really an indicator, it's an index. With this index, it tells you what percentage of stocks in the S&P index are above the 200-day moving average. It's 41. So 41% of stocks are now above the 200-day moving average. So more than half of the stocks in the S&P index have not crossed above their 200-day moving average. So that is corroborating what this indicator is telling you. Remember, this indicator is about advance and decline.
Yeah.
This index is about moving average. How many stocks have crossed above the moving average? So this one says 41%, which is close to half. This indicator is saying we are close to crossing into bullish territory, but we're not there yet. So that's another useful information that I use. So if you put everything together, what I am expecting is I'm expecting some kind of pullback.
Yeah. Then.
Maybe not a sell-off like a lot of people are predicting, because a lot of people are saying we are going lower than we went in March 23rd. That's not what I am. That's not what I am expecting. Some people say we're
Yeah,
going to
I'm
go.
not expecting that as well.
Some people say we're going to go low, but it's not going to be as low as.
What's the reason why they say that? Is it because
Well,
of everything that's happening?
they say because the coronavirus is still out there, and a lot of jobs have been lost. Those jobs are not coming back. GDP is declining. All the usual economic
Okay.
indices and indicators that we look at to judge how the
Okay.
economy is performing, they are all bad. Unemployment in the US is about, I don't know, is it 14 million, or a very large number. So, and those 14 million will not get jobs immediately. So, no matter how you look at it, the situation is still bad. So, we might still get a decline, but it won't be as low as mine. Some people think it will even be lower. So, with this indicator, I am thinking at least to 2850. And how do I get that 2850? Well, that's what the indicator is telling me. This line here. So that's very conservative, somewhere down there. So for now, I'm going to wait. Well, I can't go long yet because I have some degree of trust in this indicator. So I'll see what next week looks like. And then whatever happens next week, if it goes down, then I know, okay, the indicator was right. If it go up, then I know, okay, maybe the indicator was wrong. I can go long. But you never know. You have to try as much information as you can. So that's the S&P. Hold on, let me quickly give me 2 seconds. I'll be right back.
Okay, that's fine.
The the S&P is pretty convenient to trade because you have lots of information on its performance. That's, that's why I prepared. But you were asking about Bitcoin. Are you trading Bitcoin?
Yeah. I've been picking up some few bitcoins here and there.
With Bitcoin, let me start from the weekly. This is the weekly chart for Bitcoin.
Okay.
All right. So I'm not even using indicators here. I'm just trying to use price action. Right. If you use chart pattern analysis, we have a pattern here. This is a descending broadening wedge. You can see price it's a consolidation. Price is consolidating into a narrow wedge. We have this bounce, rejection, bounce, partial rise, bounce, rejection, bounce. Eventually, price should break out like that. Eventually. So this pattern usually breaks out to the upside.
Okay.
This, if you use wave analysis, you have two kinds of wave. You have an impulsive wave. This is an example of an impulsive wave. A violent, sharp move in price. Then you have a consolidation. It's not as violent as the impulsive. It's a bit of a correction. And then you have another impulsive wave, violent, sharp move. And then you have a corrective wave. The corrective wave, it could be broad, it could be narrow, but it's not as steep as the impulsive wave. So you have another correction. So after that correction, you're expecting another impulsive move.
Mm-hmm.
That's wave analysis. So
Mm-hmm.
impulsive wave, corrective wave, impulsive wave, corrective wave. So now this is the weekly chart. So we're looking at long-term, a long-term view.
Yeah.
So we're expecting an impulsive wave. Now we might still, price might still go back down and then go back up. You never know when.
Okay.
Or it will have what is called a partial decline. So it comes down a little bit and then will go up. You never know. But we are here. So
Mm-hmm.
a close above this white line could be the sign of a breakout.
Okay.
So when you get that, when you get a close above like that, that's the breakout. And then when you have a close above the close of that breakout, that's the confirmation. Then you want to go long. Yeah. So that's the um, weekly chart. And if you look at the weekly chart, you'll see that. Let me put on this indicator. Yeah. You see that the candles, they are bouncing up support. 200, this is this is one of those moving averages.
Yeah.
Price is bounced up here, 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 here. So this is an important level in price for Bitcoin.
Mm-hmm.
That's what that means. It's an important level. If I go into the daily, let me hide this. You see it even clearly now. This is a daily chart. So
Yeah.
this was a sell-off in March. We
Mm-hmm.
sold off and then we bounced here. I think okay, there was nothing there. So we bounced from here. Now we are consolidating.
Yeah.
See that's horizontal. We are just consolidating here, and that consolidation is into a rectangle, a channel. We bounce here, got rejected here, bounce here. We didn't touch the top, and then we bounce here. So once we got here, I bought Bitcoin here, around here.
Mm-hmm.
Why? Because from the weekly chart, we have a very bullish pattern forming, which should break out to the upside.
Yeah.
And that pattern is very close to the top of the sorry, price is very close to the top of the trend line in that broadening wedge. So, and this is where price is. So we're close to breaking out. Daily chart, we're consolidating into a channel. Now,
Yeah.
this should break out up. That's what I'm expecting. So
Mm-hmm.
the first thing to watch here is a close above this channel, and then that's the breakout, another close above that candle confirmation.
Okay.
So this is where I entered my long position. So we're advancing to the top of this channel. Once
So
we
we're
get,
just right.
yeah, when we get there, you never know what might happen. We might come back down, we might go back up. You never know. So
Okay.
just have to wait. So if you can't wait for the breakout, you can trade small positions within this channel. Price will bounce back and forth within this
Okay.
channel. Eventually, it will either go up or it will go down. But usually,
Okay.
you get a close below or above the line, then you get another close below or above that candle. That's the sign.
That's the sign. Okay.
Yeah. You can see here
Okay.
we broke below the trend line, but we closed above it.
Okay. Yeah.
Yeah, we broke down, but we closed on top of it. So if you want to see the breakout and the confirmation, then you can go long there or short.
Okay.
Or short,
That's
yeah.
short.
So right now we're just bouncing, we're just consolidating. You can make some profit within this range, but the real money is that move. That's the real money.
Yeah.
Real money.
Oh, that's cool.
Yeah, and if you look this way, you can almost see like it's almost this or the weekly. I think it's the weekly. Yeah, the weekly. You can almost see like a well support there,
Mm.
almost like a support there. See, price, price, price. I'm expecting this to break out upwards. I expect it to break out upwards.
Oh, cool. Mhm.
Trend line, show, not this. Yeah, I expect it to break out upwards. But you can, it's, it's a game of patience.
Yeah, it's a game of patience. That's it.
Just have to wait.
That's what it is. Wow, this makes sense. Nice. Mhm.
Yeah. And then you have another thing with the S&P index. If you look at usually when the stock market is when investors don't have confidence in the stock market, they begin to put their money in safe havens like Japanese yen, gold, silver,
Yeah, yeah.
bonds.
Cool.
If you
And I
if you
want to
look,
feel like that's exactly what is happening now, especially because one thing I found out is during that much um, downward trend is the same. Most people like kind of just sell off and take their money and just keep like just go
yeah,
like convert cash. So right now, most investors they have like pool of cash just waiting for that moment where they
yeah,
can get back to the market, which they've not really find out yet. So right now, we have lots of people just sitting on cash and just waiting.
yeah. So because there is confidence in this recovery.
Yeah, yeah,
So that's why I'm thinking if next week we see a very strong move, people might jump in.
yeah. People are jumping and the market will just go like
Yeah, yeah, you don't want to miss this one. If you miss this one, yeah, you don't want to miss this one.
yeah, yeah,
This one could take us back to all-time high.
yeah. To what time?
Now, if you look at silver, actually GUSD, silver has formed a a very bullish chart pattern.
Wow.
See, that's a bull flag. You have, I'll put it on, I don't use 4 hour chart. If you have an area of consolidation here, that's the flag. You
Mm,
have a you have an area of strong impulsive move up. Remember, using wave analysis, you have
yeah,
impulse and correction.
correction.
So
Yeah.
this this is the impulsive wave.
Mm,
Now, after that wave, we consolidated, moved up, got
yeah.
rejected, bounced, moved up, got rejected, and it looks like we have broken out. So you look
Yeah.
here,
Okay.
price closed above the flag.
Mm,
Yesterday, we got a strong candle.
mm,
That's the confirmation. So this could be
yeah.
a beginning of the next impulsive wave.
Wow.
If you put on the T-map indicator, look at the
Mm,
200-day moving average. Can you see that blue line?
yeah, I can say.
So it looks like that area is a strong support. So price is bouncing off that area.
Wow.
You can see it didn't even get to the bottom of this flag. It was just
Mm,
bouncing off the 200-day moving average. So after this Wednesday candle, it just took off.
mm,
That's that's Tima. I use Ichimoku. You can see Ichimoku is telling you that it is safe to go long.
Wow.
You look at all the on this off. If you look at all the signals that Ichimoku can give you, you have
Yeah, it's just
this
like yeah. Stories.
you have price above the cloud.
Hmm.
Uh, the conversion line crossed above the baseline long ago, and it
Yeah,
hasn't
long.
crossed. So we had the consolidate. So Ichimoku crossed above here. We had the crossover here, and then we
Hmm.
entered this channel. Look at this channel here.
Hmm.
That channel, the one with Ichimoku off the city channel.
Yeah.
So we crossed above here, entered this channel. Ichimoku remained bullish, but the candles were in the cloud. So with
Yeah.
Ichimoku, you don't trade when the candles are in the cloud. And then price broke above the cloud here,
Hmm.
and then we got this impulsive wave. Then the conversion line now separated from the baseline.
Yes.
Sometime somewhere around that date, the lagging span broke out of the cloud. So this is almost giving you confidence that okay, this is in bullish territory. This is a signal to go long. And if you turn this T map on, you turn it to Moku off, you can see here, notice, you can see that is showing you that we have a trend,
Wow.
upward trend. The lines are parallel, they are almost evenly spaced.
I mean, all indications just show like.
Yes. So that is silver. If you now, if you look at gold, XAUUSD on this up, no, on this up. Gold is also having a very bullish chart pattern form. So silver has a bull flag, gold has formed an ascending triangle. So you have
Hmm.
this horizontal trend line and you have this upward sloping trend line.
Yeah.
So this is your impulsive move here. So what we're doing now is we are consolidating. Price hit the top, got rejected, bounced off this one, bounced here, bounced here. So its price is consolidating into a narrow range. Eventually, it's going to break out and then it'll give you confirmation to go long.
Hmm.
So gold and silver are highly correlated,
Wow.
highly correlated. And you
Hmm.
can view that with a correlation coefficient. Bring up my include silver XADUSD. Oh, I have too many indicators.
Okay.
Let me close and remove this one. I can only use a maximum of 5 with my
Yeah. Yeah. I'm gonna try this too. Unless you want to upgrade.
right. This is the correlation coefficient of silver and gold. 1 means perfect correlation. If gold goes up, silver goes up.
Okay.
Negative correlation means if one goes up. So if you look at gold and silver over the years, see that this is the scale here. 1 is at the top.
Yeah.
So
What is that?
right now correlation is around 0.8.
Wow. That's
That's
high.
that's pretty high. So if you look at
Yeah.
the average is 0.97.
Yeah.
But once in a while the correlation breaks down here, there's a breakdown here, breakdown here. This one even went negative.
Yeah.
So most of the time they are highly correlated.
Yeah, it is. Wow,
So what that is
that's very
saying,
interesting.
so what that is saying is, if you see, what's this? Mm, okay, I know what that is. So what that is saying is, if you see gold breaking out to the upside, very soon silver will follow
Mm,
because they are correlated. If silver is
yeah.
breaking out, gold will follow. So
Wow.
silver currently is outperforming gold. Usually silver follows gold, but right now, if you look at gold silver ratio, what this is showing you is the ratio between gold and silver. That is how many, how I don't know how they say it. Is it how many ounces of gold or how many ounces of silver can you use to purchase 1 ounce of gold? Something like that.
Okay, okay.
Yeah, but that's for people trading. If you, so I mean, people who buy physical gold and silver. For people who are,
Yeah, that physical. Yeah, yeah.
yeah, for those who are trading, what this is telling you is when this chart goes up, it means gold is outperforming silver.
Okay.
When the chart goes down,
Silver is outperforming.
silver is outperforming gold. So right now, silver is outperforming gold. That's why I don't know if you have noticed. You noticed for the past is it 2 weeks, silver has been very strong, very strong candles. But gold has been very weak. It's not really moving that much.
Mm,
It's not really moving that much. Look at yesterday. Silver had a move of
wow.
2.85%.
Mm,
You can see the value there, 2.85.
wow,
Gold,
that's good.
that gold, very weak, 0.63. In some cases, it's even selling, it's even declining. So silver is currently outperforming gold. That's why you see that silver has broken out of the bullish pattern.
Mm,
Gold is still making its way up,
mm.
still
But
making its way
surprisingly,
up.
really small, like low.
Yeah. So eventually it will break out and it will begin its rally. So what I is showing you is investors are supposed to be piling in their money into the stock market, but silver and gold are about to break out. So what does that mean? The stock market should move inversely to silver and gold.
Yeah, see,
But-
yeah, reverse. Yeah.
Yeah, but right now they are positively correlated.
Yeah,
So
exactly.
so that's why I am very skeptical of this bullish rally. I am I believe in that gold and silver signal. So that is making me think maybe this is the stock market now. Maybe this one will go down very soon. I don't know for a fact, but I see silver, I see gold. They're about to take off to the upside. I see the stock market, S&P is showing signs of exhaustion, is struggling.
Mm,
So it makes me feel maybe it's going to go down very soon.
mm,
And then I look at bonds. This is bonds, TLT.
yeah,
Bonds and precious metals are considered as safe havens. So when
yeah.
the market is selling off, so when we sold up in February, you look at bonds took off.
Mm,
No, 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 yes, when we sold up in February, this is February, yeah, from here, bonds took off. When we started recovering, bonds sold off. So right now, bonds are consolidating into a bullish pattern. So you have a bounce here, rejection, bounce, down. So this is consolidating into a falling wedge.
mm.
That's a falling wedge. Eventually, falling wedge will break out of that pattern, and then you get confirmation. So you have silver, gold, and bonds. These are safe havens that investors put their money in when the stock market is going down. They
Yeah.
are all showing signs of going up. The S&P is showing signs of slowing down. So it makes me hesitate to start buying the SPY. Very reluctant.
Okay. But this was that showing you a strong signal. Would you rather put your money in like the
Oh yeah,
precious metal?
I am buying bonds and gold right now.
Wow.
Yeah, I'm already
Okay.
buying. I'm already buying bonds. That's TLT. I'm
Yeah.
buying gold. Silver. I don't really trade silver. I just look at its correlation with gold.
Okay. Okay.
Yeah.
Okay.
These are the five that I trade. I trade Bitcoin, US dollar, bonds, gold, stock market.
Okay.
All these other ones are just indicators.
Indicators, yeah.
So those are the five I trade. So
Hmm.
I'm only one I'm not. I'm selling the SPX. Selling
Okay.
the SPX. I added to my short on Friday because I think there's going to be a pullback. And if there's
Okay.
yeah, if there's no pullback, I'm ready to lose a small amount of money because I can
Yeah.
always
How
jump
do you
into
do
the
carry out shorting? How do you do shorting? It's one
just
concept I've
sell.
not. Okay.
It is
So
a bit complicated if you were trying to do it in the US where you have to buy the actual stock or you have to borrow the stock and then sell it. It's a bit complicated, but with eToro, it's very easy. You just sell.
okay. Okay.
And
Okay.
so, if you want to short on eToro, this is my virtual account.
Okay. So you do your buying and selling in nature, right?
Oh yeah, yes. The other, the other brokers are not very user friendly.
Okay. Yeah, eToro is very user friendly and
Ah, I
very
love it. It doesn't
easy.
even use the traditional terms for certain things. Just
Hmm.
use plain English. You know,
Yeah.
other brokers. I I have several. I have markets.com. I have IG option. I have Trade Zero. But man, after I even have Wanda. I have
Uh-huh.
interactive broker. But once I sign up and I look at the interface, I look at all the
Yeah.
terminology, it just puts me off.
Hmm.
Yeah, it just puts me off. It's so complicated. It's always so straightforward.
Yeah, eToro is straightforward.
Yeah, if I wanted to sell the S&P now, I just click
Hmm.
on the sell. I instead of buy, I come to sell. So this is
Oh,
short. If I use this,
okay.
yeah, I'm shorting.
Oh,
Ideally, if you buy, when you close your position, you're selling.
yeah. Yeah.
Yeah, that's the proper use of the term. And if you
Uh,
think that the stock market will go down, you short it. And
hmm.
when you close your position, you have covered. Okay? You cover your short. So you
Yeah.
short and you cover. You buy and you sell. So those are the times. But with eToro, they removed all
Yeah,
that jargon.
if you're selling, do you put like if I'm buying now, for instance, now I could like okay, I want to buy certain numbers, like I don't know, it's that this is index. Okay, it's different from maybe proportion
Oh
like
yes,
individual where you buy a certain number, like okay, I want to buy 50 worth of shares or 100 worth of shares and all of that.
yeah, that's
It's
different.
different.
This is an
Okay,
index. This is an
okay, this is an
index
index
of
just
500
oh,
stocks.
okay.
Yeah, yeah. With the shares, it's basically look at the price of one share. You look
Yeah.
at Rightmove. One share costs 588.60. Yeah, so 588.60.
Okay.
That should I don't even know how they do it. I don't know how they use units. I don't like using. This is why I like eToro. I don't fully understand all those units, all that stuff. So what I just do is, how much am I willing to pay? Okay, one share costs 588. I put 588 there.
Okay.
Yeah, and
And
I'm
you
not
can't buy
really.
anything more than that, right? Since that's the price of the share. Like you
Yeah,
can't buy.
yeah, that's the price of one share.
Okay. Okay.
And I am not really an investor. I just want to trade, so I don't really care about. I'm not trying to own the share,
Okay.
so I don't really bother about that. I just want to trade it.
Okay. And what's
Yeah.
your strategy in terms of setting all the stop loss and gains and all of that? As in what?
There are different ways to do that. There's some blanket rules like do not risk more than 2% of your overall account. For
Okay.
example, if this is your overall, no, not this, yeah, this, if this is your overall account,
Yeah.
103, for any trade, you should not risk more than 2%. So if I want to
Okay.
set my stop loss, uh, with, uh, there's a way you calculate it.
Okay. Okay.
There's a way to calculate it. So this is the percentage of the amount position as
Okay.
this position, but it is generally accepted that you shouldn't risk more than 2% of your overall account. So you can do
Okay.
a calculation of how much that will be
Yeah.
when you're
Yeah. Yeah.
trading. So you need to
Okay.
first of all calculate your position sizes. If you have 10,000 in your account, you don't want to place a position of 8,000. That's too large. So
Yeah.
you calculate your position size, then you calculate your risk. So for me, I'm a trend follower. So
Mm.
once I identify the trend, I'm expecting it to go on for a long time. So I just jump
Oh,
in, set my stop loss to a level that I am happy to accept a loss. With
okay.
with this indicator, you can calculate your risk
Mm.
with the TD sequential.
Okay.
And the way we do our calculation is right. Let me look at this. So with this indicator, if you wanted to place a position, let's say you wanted to on the 23rd of March when the market bottomed,
Mm.
you were getting ready to buy, and then on the 24th of March, you got this aggressive 13 signal to go
Oh,
long. So you wanted to go long here. What you will do is using this indicator, it helps you calculate your risk. You will measure the full range of this candle, that is the bottommost candle, that's this one
yeah.
here. You will measure the full range, that's from from here to, oh no, not that one, I got it wrong. Oh yeah, so it's maybe from here to here.
How do you know that pull range? If you know
How do you know what?
the pull range, like that range, how do you get to
Yeah, you look at this. See, I use this channel, this rectangle,
calculate?
to demarcate the high and the low.
Okay, 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 I get it.
Okay, so this level here is the close. This level here
Mm.
is the open. This is the high. This is the low. If you look,
Yeah.
you click on that rectangle or the
Okay.
channel, and you look to the side here to show you the price.
Yeah.
So you can do some subtraction. You get the full range. Okay, so this
Okay.
2392 minus 2177 gives you that range. You now add that range to the low. So when you add
Okay.
that range to the low, it will give you a value somewhere here. That's
Mm.
where you get your stop loss.
Okay. Okay.
Now this is
Okay.
using this, so with this indicator, the calculation of risk is built into it. That's how you calculate the risk.
Okay. Oh, cool.
But
Nice.
some people use other methods of risk
Yeah.
management. But this one is very
Okay.
straightforward
Yeah, straightforward.
because
Yeah.
your risk level will depend on the candle.
Mm. Yeah, it's factors in.
As long as
Yeah.
you trust in the indicator that it will to keep you safe, or I don't know how to put it. But if the indicator says it will go long here, that system is also saying we do not expect price to fall below this level because we are saying this move is already exhausted. So if it doesn't reverse here, then it should only go down further, but not go below this point. That's what it's saying.
Yeah.
So depending on the amount of trust you have in that indicator, you can use this. Or you can just say, I won't use more than 2% of my capital.
Yeah.
That's,
Okay. All right. Well,
that's
cool. Makes sense. Yeah.
yeah, that's one way to do it. There are many ways to do whatever you want to do in trading.
Okay.
Yeah, we're going to see next week what's going to happen with this.
Oh yeah, yeah, yeah. Thank you
I
so much
I
for this.
really I really I don't trust this market. I won't be surprised if it goes up because it's so crazy. This market is so crazy.
Yeah,
So
that is true.
I know people who have been selling from here, from this
Hmm.
line. Yes, they've been selling like not small position, huge position. So confident that we're going down.
Mhm.
Because with this nine, the expected reversal was here. So they
But
were
you didn't
expecting
get that.
us. No, we didn't. Look at where we are now. I don't. I don't. I'm bet. The only reason I am confident is because of this cluster here. Sequential 13, 9 sell setup, combo 13, and then some other market breadth indicators. But we will see. Next week will be interesting. Very
Yeah,
interesting.
that's interesting. I'm looking forward to it.
Right. I'm going to stop sharing now.
All right. Thank you very much. I appreciate it.
All right. Okay. See you later. I'm going to upload
Let's
this to
see.
YouTube. Right. Okay, man. Thanks.
All right. Thank you.
See you later.